Welcome back to Morning Markets on Tuesday, the 20th of February. We're seeing some real strength in profit growth across companies. Yesterday we had an update from a number of the European banks. Stay tuned to find out more. Yesterday, Banco Santander reported that their profits in 2023 grew by 15% to 11.1 billion. The final quarter was 28% higher relative to the same period last year. And this was really supported by increased margins in a higher interest rate environment, through customer growth, and actually through prudent cost management. In terms of the regions which were the best performing, Europe saw profit growth of 45%. This is a really important region for the bank, and it was really supported by improved customer access to financial products following the investment which they've made in technology and app-based products to make these services more accessible. Across in North America, profits were down around 20%, and this was really due to the higher provisions which they've had to apply across the bank. There's therefore some plans to streamline the North American unit of the business to improve that profit efficiency. The bank offered a final dividend of €9.5 to shareholders, existing shareholders, for the year, which means in totality they're going to return around 50% of the profits which they made last year back to their shareholders. And this is an improvement from the previous year where they returned 40% of profits. They're also going to issue a €1.5 billion share buyback scheme, which will run until June. So they're going to be buying back shares from the existing shareholders, which once complete will bring around 11% of the total issued capital back onto the bank's balance sheet. And as a result, shares were up 1.8% on the day. Barclays saw 10.6% annual profit growth, which is ahead of the 10% target. In total, it's around €7.5 billion. Though they did report some pressures in the final quarter of last year. These were mainly cost pressures as the business invests in a strategic overhaul of the way in which they look after their different units. Essentially what they're trying to do is segregate the different units of the bank to ensure it's easier and more focused in terms of how they monitor the financial performance of each unit to enhance the overall efficiency and profitability. They're going to return 10 billion to shareholders by the way of share buybacks over the next 3 years, and they're actually going to use less debt in terms of bond issuance in order to finance business activities over the coming years. So through that prudent cost management control, it was taken very well by shareholders on the day. The US market was closed yesterday, so very quiet in terms of the market and economic data which we saw. But tomorrow we look forward to bringing you a further update here on Morning Markets. Thank you for watching.